Laura, we were told this was a make-or-break quarter. If they miss sub-guidance again, look out below. Why the reaction today?
You know, I think expectations had been reset lower, and they did hit their aggregate sub number. They hit about 6.8 million subs total globally, and they had guided to 7 million, so it was a lot better from a reported basis. We would note that they added $3 India subs, so we actually think they would have made a bigger miss in total and offshore if they hadn't had the $3 new product in India.
And what do we make of their Q4 guidance now?
You know, I mean, I think it's better. We thought it might be a negative guide. They're saying that the reason that their U.S. subs are weak is because of the price increase last June. We think our studies show that people are already disconnecting Netflix in anticipation of the Disney bundle, and they're buying new iPhones, which gets them the new Apple bundle, which is essentially for free if you buy an Apple device. So if we're right, then they're going to continue to miss their U.S. sub estimates. And if they're right, then when we anniversary the price increases, their U.S. ads should stabilize.
Brian, what do you think about what Reed Hastings had to say about the competition and saying, look, actually, it could be good for us because for a long time there was that switch from broadcast to cable. Everyone went in that together. And if now we're moving from linear TV altogether to streaming, we could be in this together.
I do agree, at least in the United States. I think that the amount of time people can devote to what we call television is relatively limited, and Netflix and all of the new services are going to be competing for that time. I don't really think they're competing with Fortnite, as indicated a few quarters ago. Outside of the United States, though, and this is where I think the opportunity could be bigger, TV consumption patterns are very different. They're usually a lot lower than they are in the United States. And in many countries, pay TV, as we know it in the U.S., never had the same kind of penetration levels that it has in the U.S. And so this is like adding basic cable in some respects, which could cause an elevation in consumption. In that sense, it's a greenfield for an opportunity.
Brian, I'm trying to understand how investors are going to view the stock from here in terms of what the most important metrics are. It typically has been subscriber growth, particularly internationally, which was the bright spot. Is that just going to continue to be the key metric?
Well, you know, I'm no longer an analyst covering the stock, but I have to say the thing that always befuddled me when looking at Netflix was how the cash burn was always going to seemingly be a problem, you would think, but it hasn't been. And I think that, yeah, as far as I can tell, and Laura would be far better to opine on this, as long as the sub numbers keep going up, I think that investors will be happy.
All right, Lauren, go ahead. Take a shot at that, Laura.
So I think the issue is going to be that ARPU is going to come more into focus as you start adding $3 mobile-only subs in these developing countries. I think the street is going to find your granularity about what kind of quality subs offshore Netflix is adding. And I think a stock that trades at 7 times revenue, which is where Netflix is down to, can't sustain a negative sub growth anywhere in the world, and that includes the U.S. So I think as you get increasingly, bundled sub ads from like Amazon and Apple and Disney, it's going to be harder for Netflix to maintain a positive subscriber growth in the U.S. And importantly, the ARPU in the U.S. is 40% higher already than international, and as I say, they're adding $3 subs in India, so that's going to bring down the ARPU offshore. And I take Brian's point that they had sort of guided us before this quarter to a cash flow break even in 21, and now it feels like they're pushing out to 22 or 23. And I sort of think that's going to get worse and worse as you get more and more competitors with AA balance sheets and huge cash hoards that Netflix is required to compete against now going forward.